What's up, you guys? Welcome back to the channel. For those of you who are new, my name is Evan and I make videos about hot stocks, dividends, and options. So if that interests you guys, make sure you subscribe and hit the notification bell so you never miss when I upload. Now in today's video, we're going over why NIO is up over 1,500% in the past year and potentially why they could continue rising and why it might not be a bad time to buy in right now. So this 1,500% increase is not year to date. So it's comparing the price to exactly 1 year ago on October 15th of 2019. So from October 15th, 2019 to 2020, they're up 1,553%. And that's just a crazy increase for a stock. And part of it contributing to this big increase was yesterday's big price spike. As you guys probably know, I put out a video yesterday discussing if NIO was still a buy at the $26 share price. So if you guys haven't seen that video, make sure you go and watch that as well. But you can see in the past week, NIO is up 25%. Now on the 1 week chart, that's a huge increase. And you can see most of the week before the big spike yesterday, they were pretty flat. And NIO was bouncing around 2150, which seemed to be a pretty good support line. And then yesterday, an analyst from JP Morgan put out a new price prediction for NIO at $40. And so we saw NIO spike up huge yesterday. And then looking at the 1 day chart, you can see today NIO spiked up huge as well. Now right now they're only up just over 2%, but they actually hit a high of 29.23 today, which is a new high for NIO. But you can see since they hit that high today, they've tapered down quite a bit. And I don't think this should come as a surprise. You can't expect a stock to spike up almost 30% and have no repercussions because of that. The only thing driving the price up was this price prediction and then people making videos and covering this new price target. And I said in yesterday's video that I wouldn't be surprised to see NIO pull back to $21 or $22 because that's where the support was. Especially right now, it looks like people are starting to sell off and secure some profits. Now that's not personally what I would do. If I was you and you're investing long term, you shouldn't be securing profits. You should just continually add more shares by dollar cost averaging in. But you can see that's kind of what's happening, and NIO is starting to taper off today. And this video might not age very well. NIO might continue going up and continue on this upwards trend for no reason. But I think NIO should pull back, and that's a healthy thing for NIO to do in the market that they're in. But again, I could be wrong and they could just continue going up. We'll just have to see. Only time will tell. So according to this article by Forbes, they think that the reason NIO could continue going up is because of their soaring sales, expectation beating results, and their high product quality. But in my opinion, I think NIO is going to continue going up also because of record deliveries each month, but also because in early 2021, they want to set a new standard for deliveries each month and deliver 12,500 vehicles, which ends up totaling to 150,000 vehicles delivered per year. And then I also think in the short term, NIO Day will also help boost up the price, and also their new vehicle that they're going to be officially announcing on NIO Day. So all these things, in my opinion, are really going to help boost up NIO in the next 6 to 12 months. So again, like I mentioned, NIO jumped up 26% yesterday, and this was just due to an analyst at JP Morgan raising their price target to $40. And at the time, where NIO was trading around $21, that was almost twice what the stock was trading for. And now you can see NIO almost broke up to $30. They hit $29.23 today. But in the long term, NIO should continue rising, whether they've spiked up now and they're not currently worth what they're trading for. I think long term NIO is worth way beyond what their share price is showing right now. Now sure, maybe right now they are slightly overvalued according to their market cap and their PE ratio and other things like that. But I've mentioned it before and I'll mention it again. Stocks don't always trade how people expect them to. A lot of times people think a stock is overvalued and yet it continues rising, just like Tesla has for the last few months and also the last few years. There's always been Tesla bears and they've hardly ever been right. So just take that into consideration when looking at NIO as well, because both NIO and Tesla are in the same EV market. So if Tesla can shoot up and continue going up, I don't see why NIO couldn't as well. But the analyst from JP Morgan expects that electric vehicles are going to control 20% of the Chinese vehicle market in 2025. And right now they control less than 5%. So that's a nearly 4x increase in vehicles that are EV over in China by the year 2025. And then also the reduction in battery prices, because for those who don't know, EV battery prices are constantly becoming cheaper and cheaper. Now it's not drastic reductions, but with improving technologies, all these battery packs for EV vehicles are consistently becoming cheaper and cheaper. And not only does that help all electric vehicles, but that also specifically helps NIO, because NIO isn't in the profits yet. And with reduced battery prices, in both the short and long term, that will help NIO increase their margins and become profitable much sooner. But there's just so many things going for NIO right now, and it's hard to argue against the share price right now. The only way to really argue is based on like market cap and saying that they're overvalued. But you could say that for so many other companies too, because NIO is constantly coming out with positive news, like their quarterly and monthly deliveries. NIO actually delivered record-setting deliveries in September with 4,708 vehicles, and that was up 133% from the previous year. And the third quarter deliveries was up 154% from last year's third quarter deliveries. And their first 9 months of 2020 have more than doubled to 26,375. And then in early 2021, they want to have 12,500 vehicles per month. Now that's just huge, especially if they can accomplish that. Now NIO also has their battery swap technology, where you drive your vehicle in, you get it swapped out in a few minutes. It takes somewhere between 3 and 6 minutes to swap out your battery, and you get a new fully charged battery, and then you drive away. So it's almost like going to fill up your gas tank, except you're getting a fully charged battery. And right now NIO has 143 of these automated battery swapping stations in 64 cities around China. And currently they're working on adding 1 swap station per week, which ends up being around 50 per year. And then to go along with the battery swap stations, they also have the battery as a service, which allows customers to buy a vehicle at a cheaper price, about 20% cheaper than the full cost of the vehicle, and then they lease the battery pack for $141 per month. So they save up front, and then it's sort of like paying for a membership to have this vehicle. But that seems very attractive to people who can't afford the full cost of electric vehicles right now, because they are extremely expensive, although the prices are getting lower. And Tesla also announced on Battery Day that they're planning on bringing out a $25,000 vehicle in the next few years. But as of right now, electric vehicles are pretty expensive, and NIO vehicles are more expensive than Tesla vehicles in general. And so by using this battery as a service, it makes NIO vehicles much more attractive to people who can't afford the full price of an electric vehicle. Now, another thing that helps NIO out and somewhat validates their share price is that in the second quarter, they more than doubled their revenue to 3.72 billion. Now this is in Chinese currency, and I believe that ends up being around $500 million. And their forecasted revenue is between 4.05 billion and 4.21 billion, or $606 million for the third quarter. And this is well beyond what analysts predicted at 3.53 billion. And the last thing I think that helps justify NIO's share price is that they actually won a J.D. Power Award ranking among the top battery electric vehicles with the least problems per 100 vehicles. NIO had 109, and then followed behind them was Tesla with 113 problems per 100 vehicles. And NIO's EC6 model ranked highest in mid-size battery electric vehicles according to J.D. Power. And NIO also has very premium designs, and they have a lot of potential to improve their manufacturing. And with this premium brand that they've created, for some people they stand out more than Tesla vehicles, and a lot of people would choose a NIO vehicle over a Tesla vehicle if they had a choice between the two. And NIO is constantly improving their self-driving technology, or their Navigate on Pilot, and they've actually partnered with Mobileye to develop cutting-edge driver assistance technologies. This basically just means that they're trying to increase their Navigate on Pilot and make it better and better. Now, right now, it's hard for them to compete against Tesla because Tesla has so many vehicles on the road giving them feedback and providing data for Tesla to look at and improve their technologies. But I would say NIO is pretty hot on Tesla's heels when you compare how young NIO is in comparison to Tesla and how early on in their business they are. So taking all of this into consideration, I think NIO's share price right now is somewhat justified. They might be a little high and they likely will pull back as people start taking profits and selling off. But I think especially in the next few months and into the next year, NIO should be well beyond this $27, $28 range. And like I've said before, I think by the end of the year, NIO is going to be worth around $40, if not possibly even higher. So if you're looking to buy into NIO and buy some shares, my suggestion would just be to dollar cost average in. Make sure you set aside a certain amount of money each month or each week, and then just buy however many shares of NIO you can get for that price that you've set aside. Then you'll be getting the average share price of NIO, and you won't have to worry if they go up super high or super low based on what you bought them for. So that's just my suggestion. I don't think you can go wrong if you dollar cost average in, especially if you believe in NIO long term and you think they're going to be well beyond this $28 range in the future. And before I wrap up this video, if you guys haven't signed up for Webull, the promotion is ending at the end of the month, so make sure you guys sign up using the link in the description, and you'll get 2 free stocks when you sign up and deposit $100. And they're both worth between $8 and $1,600. So make sure you guys sign up and claim your free stocks. Also, if you guys enjoyed the video, make sure you hit the like button because it really does help out the channel. And with that said, thank you guys so much for watching, and I'll see you back here in the next one. Bye.